Shelley Close, the CEO and founder of True Flood Risk. It's a privilege to have you on Geospatial FM.
Thanks for the invitation to be here.
All right. So you've got a unique software product here. Obviously, as the name says, for giving the public a truer impression of the flood risk at their property. The first concept, as I understand it, that is useful to get to grips with what's on offer is first floor elevation. Could you step us through this concept?
Yeah, sure. Happy to do so. So again, True Flood Risk is a climate data and property risk management platform specializing only in flood. It is used to help identify, quantify, and ultimately mitigate risk. The underlying core of our technology is a flagship solution that estimates the structural elevation of properties. In the United States, we refer to this as first floor height, or FFH. And internationally, it might be referred to as lowest finished floor or first finished floor, depending on the country. And when you take that data point and mix it with ground elevation, then it becomes first floor elevation, FFE, here in the United States. So I guess in the simplest of terms, flood maps and flood models will inform where water will flow and at what expected water depth. We're in the space of talking about at what point a structure, a building will flood. And so that's kind of like the key point of differentiation. So we work with all kinds of flood modelers, and then they can integrate our information as well to get a more granular view of property level flood risk.
There's a potential for getting confused, I think, between all of these different types of elevation. And then another issue is when you've got different sources for one type of elevation data. So is there a fusion problem here to work out what's the risk if this isn't handled well?
Oh, yes. So actually, that's the reason why we specialize primarily in the first floor height piece, the part about the actual structure. That is something that we specialize in. The ground elevation piece is really complicated in the sense that you could have multiple data sources and they could all come back with different ground elevations for that same structure. It could be caused by subsidence. They could, done it in different points of time. So that is an absolute challenge. But one thing is consistent, though, is that when you look at that building footprint, regardless of the ground elevation source that you use, that lowest point on the property is pretty consistent. And so that's where we do our primary calculation to estimate the structural elevation of properties.
Okay. Yeah, because if there's subsidence, that's signaling that elevation can change over time. And this is another piece of the puzzle.
Yeah, and that's actually another challenge that people talk about, even like we're kind of considered, when you don't have an elevation certificate, when you don't have a land survey, we're kind of considered like the next best thing in terms of getting that, information about a property. And that's a challenge, is that even when you do have a land survey or that elevation certificate, there could be changes over time to the ground elevation, piece as well. The structural elevation, that first floor height of a property, really only changes under two conditions. One, there's been a major weather event and like the house is, destroyed. Or two, someone chooses to remodel their house because they know what they're at risk, and so they're going to elevate it. So those are, really the only two times that I can think of when the actual first floor height structural elevation changes. But all the other things that go around with it, there's a lot more factors that can influence it.
Okay, so I think we should talk about surveyors just for a bit here. So you mentioned an elevation certificate, did you?
Yeah.
Okay, so what triggers that been created? Who makes it?
Oh, goodness. Okay, so I'm just going to speak. I know that you have a global audience. I'm just going to
Yes.
talk about so in the United States, An elevation certificate is a document that is typically prepared by a land surveyor or a licensed engineer, an architect who physically comes out to the property and take certain measurements of the structure, of the ground elevation, of the building, and they fill it out. And so that this information that is laid out on an elevation certificate is then used to help satisfy, loan requirements on properties. So a lot of people, when they take out mortgages, let's say on their residential homes, if it is backed by Fannie or Freddie, and they live in a designated special high risk area, typically like an AE or a VE flood zone, they will be required by their lender to get this document. So this information is really only available when the property owner is essentially forced. No one is really like, I want to get an elevation certificate. I want to spend $600 to several thousands of dollars to collect this information. And so that is why up until now, it's been very difficult to get this information at scale and at the speed that we can now do it.
Okay, so for the, I don't know, 1% of properties that have an elevation certificate in the US, you will have, I would say, high confidence from a chartered surveyor who will essentially put his survey staff in front of a total station or his dumpy level directly on, for example, the concrete pad on the edge of the house, and will be able to return to you the number of meters or yards or feet above the height datum that's applicable for that area. And that number, that elevation goes on the elevation certificate.
Sure, and there's like all these there's all these different fields that you fill out depending on the type of structure and things of that nature. But lots of folks might, see that land surveyor with their equipment out on the street from time to time. So that's but so we're kind of like considered the, when you don't have that information and you need to know, the first floor height of a property, that's kind of like where we come in. So we're using, again, and our approach is a patented technology that we developed that simply uses digital imagery. And so once you have your imagery, and sometimes, by the way, our images come from different sources, including some of the clients that we work with. Some of the communities that we work with have their own image library that they access to use. We also tap into citizen science, crowdsourcing. So between those three, we have, lots of images that we get to work with. And then the process is typically, you have you type in an address or a geolocation coordinate. We're grabbing the images, we're looking at the building footprint, we're looking at the lowest point of the respective house, we're doing our primary measurement for first floor height, and we're giving you an actual output. And then we do a bunch of quality assurance checks. So how confident are we in our first floor height? And that could be influenced by, oh goodness, number of images, age of images, visibility of images, things of that nature. And then you have different objects and images that are used to help validate. So the patent covers 3 key areas. That's very, very specific to the structural elevation of a property. And then we're also then taking that first floor height data point and enriching it with other information, because we didn't want to be known as a one-hit wonder. You didn't want to be like, just do one thing. But the folks that we were working with were like, hey, what else can you do? Can you do this? Can you do that? And we're like, yeah. So then we started to enrich our data set, our information, with other authoritative information from open source information, government data sets. And it doesn't matter on the country. I mean, this is a global solution. We're not limited in terms of geography. We're limited in terms of based on like, are the images available and of decent quality to be able to do our calculation with confidence. So we give, confidence scores. We give a risk score based on that respective property. And that will be pulling, at least in the United States, you're pulling in information from USGS, NOAA, National Weather Service, different, climate scenarios, historical claims data from NFIP. And so once you have all that, then you can come up with a risk score for that respective property. And from there, there's so much you can do with the information, whether you're looking at it from a lens of insurance, situational awareness for disasters, helping, folks mitigate, helping people, figure out that optimal mitigation strategy for their specific property over their specific home ownership or, business ownership timeline and things of that nature. And it all starts with this one data point.
Yeah. I mean, I saw a really nice example that you talked about, I think, on LinkedIn, where homeowners could make a case for funding to mitigate the risk of inundation of a basement.
Yeah, I mean, there's so many. So we get, first of all, the unfortunate thing is we get a lot of queries after weather events. We're really working on trying to raise awareness before extreme weather events so people have that information to be more informed. And that's very key because there's all these different financial calculators that kind of play into it. So the example that you're sharing, we look at entire communities and then we look at social media and articles to see what are people saying. And in this one particular example, the article that I posted last week, they had repetitive flooding and they were not eligible for to have their house being bought out, if you will, as being a government buyout program. So it's like, what else can you do? What is that mix between insurance and mitigation that can help lower it? And sometimes it changes by the house, and it also changes on like how long you're planning on living in your property. Some people have the position as, I'm just going to take a chance. If there's going to be a major weather event, the government's going to declare a disaster and I'm going to be made whole. That's really not the best strategy to take.
It's not a good assumption to make.
No, it's
Could
it is
involve
not,
bankruptcy.
it is not designed, to, and that's where again, like the insurance piece comes in, and also your own accountability, right? Like you have to have your own, you have to know your house. Like you have to, your own asset. You need to invest in it. You need to do what you need to help, stop the deferred maintenance. Let's do it. Like let's take some time and make these investments in mitigating the risk of our, these different perils. So.
Okay, all right. So if there is a property owner, perhaps because there has been an event nearby, whose ears have pricked up hearing you talk about this, what do they have to do, and how much do they have to pay? Trick question, to get the true flood risk from your service.
Oh goodness! Well, from our side, the service is free for consumers, homeowners. Anyone can register for True Flood Risk and get 3 free lookups. They usually look up their house, their neighbor's house, and maybe a relative's house. And then from there, we have, and that's actually where we started. We started as a free platform. And then we started to get the attention of insurers who said, hey, do you have an enterprise version of this solution? And we're like, why, yes, we can actually monetize this. Fantastic. And so that's kind of like how we, went down this, respective path. But very, very much, education and helping property owners, renters, businesses identify their risk and actually mitigate it is extremely, important to us.
That's really inspiring to hear for, other entrepreneurs who might be listening. That yeah, you might have started off with the free offering. You've limited it in a way to just 3 queries, I guess, per account. But then was it just organically or through the grapevine effectively that insurers came to know about it, or was there a deliberate advertising campaign or marketing campaign?
I started to attend flood specific events. So it was on my second flood conference, if you will, where I started talking about the work that we're doing. And again, initially at that point in time, it was just this, free service to help, this is like 2018, to help educate people. And I have to say, like, it's really a journey. Like, we launched, like, my founder story is that, so my home sustained very nominal damage after Superstorm Sandy struck the Jersey Shore. and it was just like a little damage to our crawl space. Whereas like my neighbors behind me, and by the way, this is a very tiny bungalow, nothing, crazy, no compound or anything like that. And I could almost like touch my neighbor's house, and like they completely flooded. And it was horrible. It took them 5 years to recover. They didn't have insurance. And so I had this, almost like the survivor's remorse, like, why was my home so resilient? And as it turns out, I had a few extra stairs leading into it. And that was the aha moment of, okay, this was the key point of difference, because like one house was fine, so again.
So how many feet in freedom units, or how many meters are we talking for those few extra stairs in elevation?
So for us, it was about a foot, 1.2 feet is what,
So
I mean, that's
literally
how
30 centimeters, 40 centimeters
yeah.
of difference was what saved you.
Yes. And so so I initially, again, wanted, to help others and just communicate this information. But then it got to more like, well, okay, now I know my risk, but what am I supposed to do with this information? And
Hang on. So now I can, sorry to butt in, but that example is so important, because you had that contrast literally with your neighbor, and that then helps understand why insurers would want to chase that as an enterprise solution, because it helps them have finer granularity on the kind of premiums they would charge between you and your neighbor, not to add to any of your survivor's remorse.
Yeah, but but it's true for insurers. It's about, risk selection, accumulation of like what that looks like in their portfolio. It helps expedite underwriting. It helps them find properties that once may have been like, that they may have just avoided because of the zip code.
Yeah.
Because there are properties in high risk areas that are actually having lower risk because they are elevated. And certain insurers do offer discounts for properties that are positively elevated 1 foot, 2 feet, 3 feet above the expected flood height. So it's actually really important to know. And then also from the insurance standpoint, when there is an incoming weather event, they will know where they can expect a claim potentially. Yeah. And some of the agents that we work with actually notify not their entire portfolio in a community, but very specific properties that have certain characteristics based on the expected, weather event. They notify them of like saying, hey, we're expecting a weather event in your area. And based on your house's characteristics, you may want to move this high value assets to higher ground to avoid a claim.
And this is driven off of, I love how this geospatial data, this first floor elevation is driving, I imagine, a lot of these notifications, at least where the weather event is about rising water. There are plenty of others.
Yeah, so it's really interesting. And I guess, for us, we only specialize in flood. And so a lot of people are, a lot of organizations are looking for a holistic view on all perils. And so for us, we love working with, other, data, providers who specialize in, let's say, wildfire or hail or flood, coming up with their own flood models, because it allows you to kind of, take certain attributes, bring them together to get the best available information and view on risk, and being able to monitor it in real time, to help, whether it's, notifying customers, of flood risk, or notifying a community of incoming weather so they can take appropriate actions.
Okay, so I'm sensing a tough question here that I'll ask you. So have you done ground truths, for example, on the whatever percent of properties that have elevation certificates? Have you checked what the difference is between what your first floor elevation is as predicted by your IP, I will say, and what a chartered surveyor says the first floor elevation is?
Yeah, absolutely. That ground truth is so important. And I do have to give a plug to the folks over at RISE, the RISE Resilience Challenge. They are based in Norfolk, Virginia. They run a series of challenges in the flood space that gives, organizations like mine opportunities to work with local governments to, test your solutions, get meaningful feedback. And through one of the Rise Resilience challenges from 4 or 5 years ago, we were partnered with the city of Norfolk to map out the first floor elevation of their entire community, to look at how many properties are at risk today, how many properties are at risk tomorrow, and if they do mitigation and potentially change their expected base flood height by 2 feet, how many properties would have reduced risk, and what will that do to their tax base and their ability to borrow money. So all of this kind of comes together. And through this program, we had the opportunity to, have a client who actually physically had elevation certificates, to do some comparison with our data. And ultimately, it came back with, based on our data, we are at 90% within plus or minus 1 foot of ground truth and 95% within plus or minus 2 feet of ground truth. So let me put this into perspective for you. Let's just, a foot, a stair is about, 0.7 feet. I'm just going to call it like that's like 0.68, but I'm going to say, so while we do have, again, we're 90% plus or minus 1 foot of ground truth, we're always aiming, to get it more precise. It's more precise when you have certain types of properties, slab on grade, properties with a basement, like things that those are our kind of like our sweet spots. It is the properties. The one challenge of our technology is that it'll be properties that you might find in places like the Gulf Shores, where they are elevated properties, and then there's an enclosure. And so we can tell you, the technology will tell you that it's raised. We can tell you there's an enclosure, and we'll do a measurement, like we'll tell you what that height is. And that's where, because of the pixel extraction of how we're actually processing the images, that's where the error is. And then it gets to an even bigger question, which is how you view risk. So I'm going to, stick with this example for just a moment. So just kind of visualize a property down at the Gulf Shores that's raised and has an enclosure.
By enclosure, sorry, I'm showing my innocence here as someone who's never lived in a flood zone or with raised properties.
It could be a room. It could be a room. Like you see, so you physically, like you can see through the house, and part of it has a door, and maybe a window.
Do you mean by the house generally is on stilts and maybe a car is parked underneath?
Yes,
but
and
you're
then
saying
next
that
to it,
part of some of that is enclosed. Okay, and it's like all right, I get it. But and that could trick the algorithm into lowering the predicted first floor elevation.
We will come up with two different. We'll come up with two different data points in those situations. So that will be, okay, it's on pilings. We can tell you that, and we can tell you that there's an enclosure. But how you want to interpret it can differ by the user, by the client. So depending on your view of risk, you might say, oh, that's 10 feet. But then someone else might say, oh, no, that's an enclosure. We don't know if there's mechanical equipment in there or if it's just a storage area. And then also, if you're using it,
it might matter. Yeah.
And then if you're using it for insurance purposes versus, emergency response. So an emergency responder will say, okay, at least it can go to the higher floor. But for an insurer, they're going to be like, wait a minute, that's a very expensive, HVAC unit and potentially a living space. I can't help, so where
there are so many stakeholders here, and they all have so many different requirements.
It is, and so we've gotten better to understand these nuances and actually ask up front, like, how do you view risk? Because we have to calibrate the API based on how they, and we kind of learned, it was a learning experience, if you will, because we had our view of risk. This is what we thought the first floor height would be, but then ultimately they also want more insights on how to interpret that for their specific, use case. Another example, can't help but, I know that you're from Australia. Have you ever seen those really unique houses in like Queensland? the Queenslander
Yeah.
style of houses.
Yes. Yeah, certainly. I've
Yes.
stayed in one.
So we've done some work for some clients in Australia, and when we start talking about the Queenslander style of house, this is again similar to the types of properties that you find on the Gulf Shores and maybe the Outer Banks in North Carolina, where they are raised, but then people have decided to put enclosures around them, and they may or may not be legal enclosures. Is that a fair assessment?
There's that as well. Yep.
Yeah,
There are
and
so many qualifications to all of this. Yeah.
so there's no like, they shouldn't be enclosures, but people have turned them into living spaces, and by turning them into living spaces for insurers, it has significant implications.
Okay, and I'm sure that governments may also have an interest then in your platform too, perhaps from a compliance perspective to detect non-compliance, and then that can lead to inspections. And yeah, okay. All right. And this is another example of how the broader geospatial discipline can help from a monitoring and compliance perspective. All right. So could you give us perhaps a bit of detail about risk scores, how yours are different to others that the public can access for free on other platforms?
Oh, sure. So I would say that just in general, a lot of risk scores are aggregated either on the zip code level or postal code level, or even the street level. But it's really down to the respective properties. So again, as I mentioned earlier, you could be a property that is located in a higher risk area, but you're positively elevated, and so you would have a lower risk. And I think that's extremely important to differentiate. Um, personal story. So where I live now is, you know, it like for example, my kids go to a public school on Pond Field Road. So that pretty much tells you at one point in time there was a pond right there. And so there is some flooding, in the area. And unfortunately, some neighbors around me, they flood. And it's not just, I mean, they're in X zones, but the challenge is also like with storm drain capacity. So this is not only just talking about that property risk, but there's other elements that are kind of, feeding into if a property will flood. And so with respect to my personal case, we had an atmospheric river here in the New York area on September 29th of, gosh, it'll be 2 years. So 2 years ago, so 2023. And again, my kids' school was evacuated. All my neighbors are flooding, and I'm out there. I'm trying to help clean the storm drain. And I had like my neighbor yell at me, and she's like, "I need to have my own fair share of water." And she ultimately like left a note, in my mailbox saying, "I'm really sorry. It was very emotional that day. Can you please help?" And so I think this is what's happening when it comes to flooding. It's very personal. Um, you know, these property owners don't necessarily know what to do. They're looking for help, they're looking for information, and not every single property has the exact same flood risk. And
Okay,
we
so a
have to
differentiator for you is that competitors or other platforms that provide these free assessments may aggregate or provide insight that is only really valid at an aggregated level
yeah,
or a more
so so
general,
so
in a
for
general way.
example, my neighbors, like, we have the exact same risk score, but we don't have the same risk. I'm elevated.
Okay, and your platform does offer insight about the difference between both properties, whereas competitors may not. Is that your point?
Correct. They could be
Okay,
without knowing the structural elevation of a property. It is very difficult to provide a risk score
yeah.
on the property level.
What's the effect of Doge on this space?
Well, I mean, again, I believe that some changes were needed, not to the extreme measures that have been taken. I think that reform is good and positive in terms of finding uh, best practices. I think that the government needs to be a player in providing foundational authoritative data sets that we can all, reference at some, especially for academia and nonprofits and local communities. And I think the changes are that it's now going to be pushing more demands down on the states and on the local governments. There's going to be, changes, obviously going on. I mean, by the time this airs, there could be a completely different direction, or a new announcement. But the bottom line is that it is going to be more of a public-private partnership as opposed to only being relied on the federal government. And I think that's actually the case. Like if you look internationally, there are other countries that do rely on the states and the provinces for funding as opposed from the federal government. But the federal government absolutely has to be there. It has to be that voice. And but I do think that when it comes to emergency response, it's the boots on the ground, those local and state officials who do know their communities better than anyone else.
Yeah. Okay. So there's a link there to the near map episode, and the conversation there had a Florida context. And near map, flies planes. Actually, it's about elevation data as well. But Chris Sams, the rep that I was talking to in that episode, made a similar point. In a way, it seems like these cuts might actually stimulate the private sector and lead to more of these public-private partnerships. So, perhaps in a way, so long as the private sector can step up, perhaps there's opportunity.
Yeah. Well, to add to that point too, personal, plug, our data is available on Nearmap worldwide. So anyone who has a Nearmap can access our data that way via API. And number two, I actually listened to your interview with Chris, and I loved his story when he was telling someone that he's in risk. He's a risk model.
The risk model?
And so you were supposed to start this interview off because you said that you were going to ask all of your future guests to please show us your wrist.
This is
risk versus wrist. So
I'm so glad that you're up for it, because it's been on my mind to actually do that and start asking guests, but I didn't want to make people feel uncomfortable.
Oh no, it's like do your homework on your previous episode.
Okay.
But to Chris's point, absolutely. And I think all of this, helps to really stimulate innovation. I mean, everything from the types of satellite imagery that is now available, after weather events, to provide the inundation depth by property. All of those things are amazing. In fact, we've had clients who have to vet our data. So when they don't have an elevation certificate, going back to that conversation, how do people vet our data? Sometimes they'll use inundation data from, the satellite imagery companies after a weather event. They'll give us a bunch of addresses. They'll tell us what the expected base flood elevation was for that, or what the inundation depth was for that weather event. And then we will predict which properties flooded and what the approximate claim might have been given the size of the house. And so they can just say, okay, this is, this is the closest way that we can vet the lift that this data will provide. So that's just another example of, all of these different areas coming together to really create synergies for insurers, governments, and ultimately, property owners and renters and businesses.
Yeah. Okay, I think that's actually a really nice sort of concluding message. That's a really dynamic space. It sounds like you're well networked and connected. And it's not just the public-private partnerships, but it's the enormous potential for just partnerships within the private sector. From, as you said, satellite operators, and it seems like every couple of months there's a whole slew of new constellations almost that hit you right on SpaceX. But then you also flagged citizen science and crowdsourcing elevation data. So it sounds like you are literally tapping every possible source of information here to get, as you say, the true flood risk.
Absolutely. So this was really fun. Thank you for having me today. This was great.
Thank you too.